Hey everyone, I hope you guys are doing well. I thought to quickly jump on here to explain something that I find is actually really useful and it's something that I only really recently figured out. And this is something I struggled with for a long time, and that was really manually interfering with setups. I really struggled with this. I found that I would always try, let's say for example, price is running like 1 to 1.2 R up or whatever, and I'm targeting 2 or 3 R, whatever it may be. I would get really scared and I would get really nervous that maybe price is going to turn against me, or it's going to mitigate this fair value gap on the 15-minute time frame and the 1 hour and whatever. And then I'll try over analyze all these different potential reaction areas, which would then result in me rolling my stop loss to break even. And then price would come down, tag me out, and then go in my favor, and I would be sitting on the sideline confused and being like, what is going on? Why? Then in hindsight say to myself, oh, I shouldn't have moved break even. I shouldn't have done that. Like, okay, for next time I'm not going to do that. And then the next scenario comes and then I do it again. And I found this was really frustrating because a lot of the instances I wasn't really getting the full reward that I was actually due for when my bias was correct and when the setup was actually going in my favor. And on top of that, I wasn't really consistently stacking those wins well enough so that in the periods where, let's say, for example, I was running into a drawdown issue, whatever it may be, I wasn't really coming out with as much as I thought I was. And that really bugged me because I knew in hindsight, if I'd let it run in my favor, I would have returned way more than what I was actually doing at the time. And only recently did I figure out that really understanding your profit factor and your expectancy of return and eliminating as much human variance as possible. So, for example, having a set and forget mentality, letting something go fixed to the full 2R, 3R, whatever it may be, or taking you out full stop loss, no interference, was actually something that was holding me back from really seeing the accelerated progress I was expecting from myself, right? And I want to dive into that topic today because I think it's a really key point that I think a lot of you can also gather something from this and try and take it back. And I will break down this trading example here just now as a pure example of how I would interfere and how I would try and mismanage trades, ultimately leading to not as high a return as what I should have. And I want to flip over to this edge simulator that I built for you guys so you can have a look, right? And basically, in a nutshell, if you have a look here, I've got the input parameters set to, let's say, for example, you have a win probability of 40%. So that means out of a basket of, say, 10 trades, you only win 4 out of the 10 trades and you lose 6 with a, say, fixed 2 to 1 risk to reward. And if you have a look over here, there's a human variance element. So this is saying that, let's say, for example, out of those 10 trades, I interfere with 4 of the trades. So I either move my stop loss to break even, I try add some discretionary element to it, like for example, the opposing Asia range high, or some buy side or sell side liquidity point, or some displacement is tapped. So I quickly roll even, watch, start chopping because I'm scared it's gonna reverse and turn on me. And I want to show you how your equity simulation actually is negative if you do this, right? And what I mean by that, well, over the longer term, if you continue to stagger and implement these same sort of mistakes over and over again, manually interfere with all of these different trading setups that you might be taking on a day-to-day basis, this is what is ultimately going to happen to you. It's going to ruin your chance of becoming profitable, in my opinion. And this is a great equity curve showing you exactly what the probability or the risk of ruin looks like if you are consistently adding. Now, let's say, for example, you increase these human variance, right? So now you like all of a sudden, let's say you interfere with 5 or 6 times, right? You can see that it gets even worse and worse, right? And that's kind of why I feel the discretionary side of things does really tend to not give you that longer term edge over the longer term versus, say, trading a more mechanical and systematic probability game. You can see here with the same win probability of 40%, targeting a fixed 2 to 1, you can see how your equity curve is also going up, right? Now, let's say, for example, I increase this to 50%, which is basically in and around what we normally trade with and what we found our edge actually plays out to be. You can see over the longer run how your equity curve immensely increases over time. And that's something that you really need to understand and really need to, on a daily basis, be comfortable with. One, because it is not comfortable, and you need to be able to have so much faith in what you're doing. And the only way you can do that, in my opinion, is if you have a mechanical, systematic edge that you can trade on a daily basis. And that is what I trade in the Alchemy. So if this is something that resonates with you and you feel that, damn, I really wish I could learn more about this and I could get these insights on a daily basis and I can learn more and more from how I've dealt and overcome with these issues, you feel free to have a look at the link in my description below. I'm going to drop the link to my membership, my mentorship for this month. We are actually ending it at the end of this month, so before we start again off in the new year. So feel free to check it out. We've got a couple spots open left, so make sure that is something you check out if this is what you're keen on, right? And I want to get back to this example of what I was showing you right just now. So let's say, for example, price is trading, let's say coming into Frankfurt Open here. This is a classic model where you take Asia high over here, you sweep some sort of sell side liquidity level to the left. In this instance, I actually think we mitigated something over here on a supply area, right? So this was for me a classic entry model, and I want to show you what I used to do versus what I do now, right? And if you have a look over here, let's say, for example, I was marking this out as my low. So in this instance, I would have my, let's say, for example, a sell stop, or maybe I put a sell limit here because I'm waiting for price to break through. So price breaks through, I get in this trade. Now what would happen, let's say, for example, price runs into this Asia low over here. Okay, I would now start to get nervous because price might reverse on me because some sort of level or some discretionary element is now conflicting my bias. So what do? I roll break even because I'm getting really nervous that this trade is going to take me out, even though we haven't hit the full 2R, which in this instance was down here. So I start to roll break even, and then price rolls through, takes me out break even. Now I'm out of this trade. Now I'm sitting, well, thinking, oh shit, well, what do I do now? Because I'm not in this trade. Do I try get back in? What should I do? Do I wait for a break of this low? So then I see to myself, okay, cool. I think I might get in here now. So then what I do, again, trying to apply the same sort of logic and same sort of theory around it, I then look to get my entry over here. Price tags me in. I put my stop loss above here. Okay, and there is probably I get taken out. Now I just went from being in a winning trade that actually went the full 2 yard. So if you have a look over here, you can see how price went in my favor and actually got 2R. But then I try to get in some scale entry because I got fearful that price was going in my direction, and I needed to quickly get in because it's a double confirmation now. Price is ready to go. We are good to go, and then I get into this trade and I get stopped out. So now I went from one, I took the trade, I was in the right direction, I got stopped out break even. I then chase the trade, try enter again, and then I take a loss. And then after all of that, price actually hit my take profit level. And I say to myself, how is it that I'm now 1% down or whatever it is that I'm risking on the day when my take profit of 2R just hit? And that really bogged me. It really bogged my mind for a very long time. And I found the reason I was struggling to get over this hurdle is because I was adding all these crazy discretionary elements into my trade management, and that really affected how I was actually managing the trade, and ultimately it was affecting my P&L and my profitability, right? So this is a great example of what I used to do and how I used to basically go about this on a daily basis and struggle with this so much. And people used to say, "Oh, just let it play out. It's going to be fine. Like, you know, it will work out in the long run." Or in some crazy instances, for example, let's say I would have, um, some unrealistic take profit of, say, like down here with a 6 to 1, and this is what I'm riding for the day. Like, it's just so unrealistic that eventually you are going down a mental spiral, because in this instance, even if you have a look here, I would have been up 5R even if I was just managing this trade like with my stop loss above here. And I wouldn't have taken a single thing because I'm trading some crazy unrealistic sell side liquidity level down here. It's just it's just silly if you think about it, right? So for me, what really helped me overcome this is having that sort of set and forget mentality, really collecting and backtesting a lot more, understanding where my edge lies, understanding what my return looks like, even if I just leave it for 2 to 1, for example, and not interfere, set and forget mentality, and just carry on with your day. And that's kind of how I've overcome this now. So, for example, in this instance, I would actually just leave my fixed 2 to 1 in this case. Price would, yeah, let's say, for example, in this instance, price comes back, taps me out, or in this case, I wouldn't get tapped out of break even because I actually just leave it now. Then you can see how sometimes price will come back to your entry level a couple of times and then eventually move in your favor. Okay, and that's just how this game works. This is how trading works. You have to let your edge play out on a daily basis, and that's ultimately what I've really tried to overcome in the last couple of years, and I've really started to nail down exactly what this looks like. So if this is something that you find really interesting for you, remember to check the link in my description below for my mentorship that's ending at the end of this month, and feel free to apply and we'll go through your application. So I hope you guys enjoyed this session, and I'll check you guys in the next one.